Hi there, this is Rob, and this is the 2-minute overnight overview for Wednesday. I'm going to show some research today, but first let's review yesterday. Here's a look at the odd sheet as it stood on Tuesday afternoon. Generally what we saw was very mildly bullish odds. QQQ stood out as the lone index security that actually met the minimum long criteria, but nothing else qualified, and in fact ES and SPY really were not close, so there was nothing for me to do. I sat out awaiting a better opportunity, which could come any day. Let's take a look and see how the night played out. After settling at 15.16 and a quarter, ES traded up and flat for most of the night. A little boost right before the open, and ES gapped up 3 points to start the day. It was a nice little start for the day for the bulls, and to this point ES has yet to trade as low as yesterday's close. Let's check out the daily chart and consider possible implications of this. As you can see, ES closed at a new high on Tuesday. Often after the market closes at a new high, it will struggle in the overnight session. This is especially true in February, as we saw a few days ago. Of course, that's not what happened last night. So today I decided to look and see what happens after unfilled up gaps that immediately follow a 50-day high. Here's a look at the results. There have been 29 instances since 2000. Only 9 of them gapped up the next day. And with gaps down slightly larger than gaps up, we see that overnight losses have more than doubled overnight gains. So the numbers suggest a possible downside edge. Let's also take a look at the profit curve. While the curve has not ever shown a propensity to rise, it seems to have flattened out over the last 9 instances versus what it did during the first 20 or so instances. So I don't love this curve. To me, this study appears cautionary for the bulls, but not necessarily compelling for the bears. That's all for today. Thanks for listening, and rest easy.